As we gain insights to shift from capability to growth, I would like to invite Alison Mackie, the Executive Director of BlockchainNZ, onto stage, who will be facilitating a fireside chat. We do need a fire. I wonder if there were health and safety regular. It would have been nice for us to have a little, just a wee brazier or something down here. We could have made some s'mores as well. Kia ora, Alison. So as I said, the Executive Director of BlockchainNZ on stage, and we're going to facilitate the fireside chat on innovation in money and financial services. So over to you. E mihi ana. Kia ora, Alison.
Kia ora. Thank you so much, everybody. So I'm Alison Mackie, the Executive Director of BlockchainNZ, also known as BCNZ, just to add to the acronyms. And I'm sitting here with Jerome Faury, CEO founder of Immersve, as well as Sorel Carr from BNZ, who heads up FinTech business. And he also sits on my executive council. So excellent to have you both here. Do you guys want to say anything to kind of introduce yourselves? And, okay. Thanks, boys. Thank you so much. So today we're talking about the future of money and the innovation behind that. And obviously blockchain has had a lot to do with pushing different money forms forward through the introduction of cryptocurrencies. But yeah, I kind of just wanted to start off with kind of like a little bit of a background. So money or currency is seen as a social standard in which payment is accepted. It is something that holds objective value that we can all agree to. And today this can be seen in the form of coins, notes, the nearly extinct checkbook, and numbers displayed on the screen, even within your bank account or the not so widely accepted cryptocurrencies. However, over the last few decades, technology has been the motivator for how we exchange currencies. So just to start this off, what do you guys see outside of cryptocurrencies emerging into the financial scene?
I think for me, if we look sort of 5 to 10 years ahead, the future of commerce, without a doubt, retail and e-commerce will collide and overlap into these immersive experiences in the metaverse. I think my kids are going to go to virtual events, they're going to go to virtual malls, they're going to have avatars. Those avatars are going to have AI, they're going to be able to transact, they're going to be able to do peer-to-peer stuff. There's going to be a whole new type of commerce and payment rails required to support the next evolution of the internet, if you will.
Yes, Sorel, anything to add to that?
Yeah, I'll probably pull on the blockchain thread a little bit, which is separate to strictly cryptocurrency. And I think blockchain has a number of really compelling features or properties to it that we don't currently observe in the financial system. So decentralization is one of the big ones, and we hear that a lot. So in the context of finance, we can think about decentralized finance. So liquidity that is provided from decentralized sources or in a decentralized manner, but also decentralized decision-making and execution of things like contracts and other operational sort of aspects. Another really interesting property is its dynamism in privacy. So blockchain tech and most of the protocols we think about are infinitely auditable and infinitely trackable. We can all access that information, which makes for a really compelling public record. But equally, on the other end of the spectrum, we can utilize that technology, and there are existing protocols out there like Monero and Zcash, or a couple of those you might have heard, where privacy features are built into it. And then also important to touch on is the general efficiencies that we can observe with blockchain in different ways. One of which is really compelling for me is the use of smart contracts, which is basically an if-then mechanism that's written in through code or with code, where if this thing happens, then that thing happens. And you can extrapolate that out and apply it in a number of different contexts. For example, the settlement of contracts, the settlement of transactions, and so on. And all those properties together form this, will provide this real clarity around how, or the architecture behind what a financial system could look like, that I'm not sure we observe today. It does feel like a technology that's accessible and understandable by everyone. So.
Yeah, I like that you bring up smart contracts, because I know that there are other technologies that aren't decentralized when it comes to smart contracts. But so where are you seeing, in terms of a bank, where do you see decentralization coming through?
Yeah, that's a good question. So decentralized finance, if we take that strain, I really like the principle of being able to access liquidity and, let's call it, debt facilities from anywhere in the world. You know, why couldn't I access a capital source that's based in Africa or India or wherever? What currently a deficiency that I see in specifically DeFi is that it fails to consider a lot of the qualitative parameters. Now, tech people, and I say it really affectionately, tech people, because I'm aware there's a lot of people in this room, will disagree with me and say that you can parameter away those qualitative features, but it's really hard to code and build in things like measuring integrity. You know, integrity not only of the borrower, but of the lender. And things like, does the borrower or the lender really understand, commercial acumen is another one, do they really understand what they're getting into? If they enter into a smart contract to take out this loan from this decentralized liquidity pool, do they really understand what they're entering into? What are the disclosures look like? And you know, second layer to disclosures, do they understand the disclosures? And there's definitely a qualitative layer that I think is missing and warrants consideration. But in principle, I like the idea of DeFi. Yeah.
I mean, one of my favorite jokes is, what do you trust more? And I'm really sorry, I know a bunch of people in here in the finance space, but what do you trust more, a man in a suit or math and logic? So that's kind of plays on that. But I do want to kind of bring up stable coins. And what are you seeing in that space? And how does it differentiate between cryptocurrencies?
I think it's good to understand what a stable coin is first off, so I'll maybe start with that. So there's two types of stable coins in the private sector. There's programmatic stable coins that use algorithms to peg to generally fiat currency, and those are the ones that have had trouble in the past, and I wouldn't necessarily recommend participating in. And then there's stable coins that probably aren't dissimilar to what we had with, you know, Bretton Woods and, you know, the gold standard when the USD was backed, you know, not one with gold, but by gold. And so you got asset-backed stable coins, and those things are actually stable. They're really interesting in DeFi. So similar to, you know, putting money into a bank and earning interest, in DeFi you can earn a yield. You know, there's people that can use crypto to borrow against and get a loan, and that's typically paid out in USDC or USDT, which are the two largest. These stable coins, to put in context, USDT last year did about 7.4 trillion in value. The entire MasterCard network did 2.2 trillion. So I don't think these things are emerging. I think they're here. I think they're reasonably mainstream. Some countries around the world have, you know, 49% adoption of crypto. And they're really good ways, you know, to transfer capital at the same speed as transferring information.
Yeah.
And this is really interesting concepts now. You know, I raised capital for a company last year and people paid me in USD, and it was, you know, seconds or if not minutes, which was really interesting relative to the banking system that took many days and cost significantly more.
Yes. I actually recently saw Janine's LinkedIn post the other day that's showed the difference between the transaction fee, like transaction times. A bank took several days, but hers was instantaneous. Yeah. I actually just saw a question here from Julia that says, do you think the term smart contracts is misleading to consumers? I just want to touch on that just before we kind of move on with the discussion. Sorel, do you have any input into that?
I don't have a particularly deep view of that question in particular, because I'm not sure how widely understood smart contracts are in general. I think as a general populace, we're still probably in the learning part of the maturity curve.
Yeah. It's more so like the nerds in the background really understand like the depths of it, how it functions within a financial system compared to, do you think so? Yeah, go for it.
So I think in New Zealand, we've all become wine connoisseurs, right? You know, you can tell if this one comes from Otago or this one's from Martinborough or Marlborough. And for some reason in tech recently, we've all become technologists, right? We talk about consensus and blockchain and smart contracts. You know, when I got into tech and email came out, no one was talking to me about POP3 or SMTP or, you know, IMAP. You know, we didn't have these conversations, right? It was about an email, right? And so we're talking too much about the tech and not so much about the values or why the tech or the outcomes or the consumer experience. So I think, you know, we're going a little bit too tech focused and a little bit too deep too soon, to be honest.
Yeah, that raises another question that I have here. It's a common argument against blockchain technology is that it is a solution to problems that don't exist. However, most of the time, I personally believe that the problems aren't always tangible, they're social. So what is happening on an international, macro, social, and economic scale that is pushing towards innovation in finance?
Yeah, I'll talk to that in a minute, but I think it's probably worth going back to the question of proposing a solution to a problem that might not be there. The stablecoin topic is a really interesting one. Now, in principle, anyone can issue a stable coin. I can print an ERC20 token or whatever on whatever protocol and say there's 100 units and I've got $100 in my bank account on trust or whatever. In the background, that represents, and each token represents $1 there. But the problem with that is that no one's really going to trust me specifically, like Jerome's not going to use my stable coin. And we see in different countries, we see sort of this race with corporates and large institutions to develop their own stable coin. Australia, as an example, I think at last count, there's 9 or so stable coins that are in circulation. And I do think, so there's the first question is, do we need 9 stable coins? But the second order thought is, I do think that there's really compelling use cases for stable coins, particularly in the short term and around efficiencies. So we can observe, things like near instant settlement, markets being open 24/7 with stable coins in circulation. The example Jerome gave of being able to raise capital in different forms and formats. So there are use cases there, but I think we're in this period of oscillating between, advancements in the technology and actually understanding what the true use cases are and where the real value is. The secondary, what was this question?
What's happening on the macro, social, and economic scale that's pushing towards innovation? Because obviously blockchain technology came about because of the 2008 global financial crisis, and people didn't trust banks anymore. So what's happening now? I mean, I know that we're all ready for a recession. Go for it, Jerome. Go for it.
What I think is a problem is that 62 people in the world control half of the world's wealth. Half a dozen companies have access to the world's most valuable asset, data, or more specifically, trusted data. The gap between the have and the have-nots is widening. So if you look at the values of decentralization, that people should be the owners, the custodians, have sovereignty over their digital identity, their data, their assets. Over history, generally speaking, individuals have been in control of their money. Whether I had chickens and someone else had potatoes in the bartering days, or whether I had precious metals, generally speaking, I was in control of my money. More recently, centralized entities have done that, and then they've made decisions on our behalf. Now, as an example, last year I wanted to buy some crypto. Ethereum went down. I wanted to buy some crypto on my card. The bank declined it and sent me this text message that I had to call up this 0800 number, and I had to have an interview with someone at the bank around the risks associated with cryptocurrency. Now, I've been in crypto and reasonably deep in crypto for a number of years. And so this is like a 12-year-old kid that's watched a YouTube video around how to do a hill start in a manual, explaining to me how to drive a car. It's like, this entity shouldn't be telling me about the risks associated with cryptocurrency. And if I want to spend $1,000 or $2,000 on some crypto, I should be able to. And so this empowers individuals. It doesn't mean that you can't trust a third party or a centralized entity, but at least you've got the choice.
Yeah. And
I think that's important. And I think we've got to look at the values more so than the tech and what it enables. And I think the other thing is paper money was pretty innovative 1,000 years ago, right? But we're a digital society living in this digital world. Surely we need a digital currency that works on the internet as we go to this internet of value, this internet of money. It's just obvious.
Talking about digital currencies. So there's been a lot of discussion about from the Reserve Bank and across government internationally about CBDCs, so a central bank digital currency. So how is this different to a stablecoin, and how is this going to be implemented into society? Like, how will I use it?
So if you think of a current stablecoin as a private coin being asset-backed, then what happened when we got rid of the gold standard, Nixon in 73, give or take, basically reneged on the deal to convert to gold at the agreed price. and we come up with this thing called fiat currency, which is basically government-backed currency. And so all we're simply doing here is the government would issue natively digital currency. And that's kind of step one, but it could get smarter. Money will know where it is, where it's been, where it's allowed to go. You know, if a fintech's operating today and we want to comply with the AML and CDFX, we need to be reporting entities, we need to report suspicious transactions. Now, what if the currency itself and the network itself could codify compliance? So if I want to send $11,000 to someone, as long as we've both been KYC to an appropriate level, as long as the source of funds is known, then we can do that transaction. And so things become a lot more efficient. We're going to start seeing things around digital identity, but not just for us as individuals, but for entities, for businesses, for devices. You know, my car is going to transact with a parking machine. I'm going to give it delegated authority to transact on my behalf. And all of these things become possible when you have currency that works on the internet, when you have digital identity that enables trustless peer-to-peer value to take place. And if the government issues this, and I think the other thing that gets really interesting is, you know, the banks that were basically set up to distribute paper via these branch networks, you know, they're not very good, with all respect, at distributing data via APIs. You know, we're kind of moving backwards. We used to be the world leader in payments, the All Blacks, if you will. Now we're not even the all whites, and actually we're going further backwards. You know, with all respect, what this will enable is for, you know, companies in this room to actually innovate, to do really cool stuff without the shackles, if you will, of the traditional finance sector. And that really excites me.
Yeah. So how is this happening overseas on a government level? Do you see that happening?
Yeah, I mean, we've got, in the context of CBDCs, there's over sort of 115 odd countries at last count, accounting for something like over 95% of the world's GDP, looking at different forms of CBDCs and at different stages of iteration. A country like Sweden looked at, you know, sort of decreasing use of physical cash some years ago, many years ago actually, and have since done multiple iterations of their own e-krona, I think it's called. But Jerome picked up on a really interesting point around fairness and inclusion early on in that last question. That talks to sort of the use case of a CBDC. But then, and actually Ian, because Ian from the RBNZ articulated it really well, that there has to be a compelling case for that. And you know, we can think of it as a V2 of hard cash. But I think of, in the context specifically of fairness and inclusion, if we roll out a CBDC and, you know, you access it through a device, what about the people in our communities who don't have access to a device? And that probably talks to a coexistence. Like there is a definite there is some iteration of a CBDC or digital money that, you know, is in the pipeline, but I think there's a period of coexistence, at least with hard cash. But in terms of downstream issues that we need to think about in the context of a CBDC, it's probably worth pointing some of those out. One of them is distribution. So, and actually Jerome pointed that out as well. You know, does the RBNZ in New Zealand's case distribute directly to users through MyIR or whatever function, or do they go through intermediaries like fintechs and banks to distribute? And if they go through the former, I think they have that's a big logistical task. You know, you can deploy the contract and, you know, in principle airdrop tokens or whatever, but there's an ongoing logistical component to being the direct D2C provider of that currency, if you like. Yeah, go
for it, Jerome.
Well, I know we're talking about the retail stuff, so I like to talk a little bit. But the New Zealand dollar was super innovative. In the 80s, we were the first to sort of freely float it internationally.
You're stealing my question.
Oh, really?
I had that written down, yeah.
Oh.
The 1980s, the central bank.
Well, 2.1% of all FX is NZD. You know, so we punch well above our weight as far as FX with NZ dollar, and because we are stable and we did have an innovative currency and people trust the New Zealand dollar. Now, if we don't evolve the dollar to keep up with the times, and all these other countries are doing CBDCs and transferring value internationally digitally, then we lose that advantage, and that's not good for New Zealand. So yeah, I think that's an important point as well. There's wholesale CBDC and obviously retail.
Yeah, that's really interesting. Hey, so So going back to the 1980s, I wasn't alive at that time because I'm youthful. We were the first to adopt FPOS. And the reason why this was so pivotal is because of the political changes, and our government took advantage of that. So what's happening right now that's kind of similar to the 1980s, and how can we become early adopters of new forms of money? Do you think we're at the right time, or do you think we're too late?
Look, I would be keen to talk to anyone in the policy space here around what the government did when, FPOS came out, when internet banking came out, when mobile banking came out. Were there 3,000 hours of meetings to talk about all this stuff, or did we just get on and do it? and that's what happened with FPOS, right? You had, two networks that came together, and then, eventually kind of merged into one. One went private, and it was free for everyone. Merchants didn't pay, consumers didn't pay. We're one of the first, but not the first. But we've gone so far behind, so far in such a short period of time. It's really bad.
Yeah, and being in the blockchain space, I don't just deal with DeFi things or cryptocurrencies. There's across the board blockchain, and one of the massive issues that I'm kind of banging my head against the wall all the time is regulatory frameworks and compliance and things like that. And oftentimes blockchain is moving so fast, so much more fast than government can keep up with, which is halting innovation for a lot of our startups, a lot of our companies that are utilizing blockchain technology. So from a government level, what sort of frameworks are we looking for? What can really help our companies kind of scale up or adopt new forms of money?
Well, I think for payments at the moment, the way it's kind of regulated and governed in New Zealand is too complex. I don't think there's sufficient teeth, from the government. I think we've got FMA, PaymentsNZ, which is owned by the banks. I love PaymentsNZ, but it's the turkeys voting for Christmas as far as this stuff goes. You got NBIE involved in there. You've obviously got ComCom involved in there with interchange. You've got all of these parties having all of these conversations.
Yeah.
Then you give things like digital identity in here, which I think is a core pillar to enabling digital currency. Ministry of Health is doing its own thing. DIA is doing its thing. MOE is doing its thing. We don't have, a minister for technical infrastructure investment, right? We've got this great investment in fiber to the home that saved us during COVID. Where are the overlay services? Australia put $1 billion into MPP. What's the budget from the government at the moment to invest in digital identity, to invest in digital currency, right? Where is this coming from? Because digital identity is something that's really hard to commercialize.
Yes.
People don't really pay for it. At the moment, what happens is big tech basically give you this login, and so that they can see what you're doing with your login, what websites you're going to, and they'll sell it to the highest bidder. So that's how they make their money, but that's not the way it should be. And so I think this is something that needs to be government-led. I think, the golden rules, whoever has the gold makes the rule. And I'm not seeing a whole lot of gold go into this. And I'm not seeing a whole lot of pressure on the banks to get it done by a particular period of time. So, they're doing it and they're doing it at a pace that works for them. But what's their incentive to make it go faster, right? Let's open it up so people can compete with us.
Ask Sorel. He should know.
Sorry. I'm going to lose a few friends after this. I feel it already.
The amount of times I've asked Sorel questions and he just goes blank.
Well, no, it's not really about going
It's not going blank.
It's just
poker face.
Well, no, there's a number of sort of soft factors that we do need to think about, and like Jerome and I will disagree on some things, but we also agree on a lot of things. And like I said before, I think as a sector, the technology is moving so fast, and consumer protection and customer protection is always front of mind. And it's easy to say, well, let's open the gates, if you like, in the context, like, in this room, because everyone here, we're talking to people who are all best in class, but not everyone is best in class. Not everyone is able to, appropriately protect things like consumer data and all these sorts of things. So, and the regulation by design, and to some degree, corporates following suit, comes after the innovation. And so, banks and government are in this exploratory phase about how to deal with this technology. And I would say that whilst I agree with Jerome on sort of the tangible input for faster tangible output, I do think that New Zealand is unique in that, you look at the amount of government representatives in this room, that any of us can go up and talk to. You can call the FMA up. Many of us know people at the RBNZ. The IRD is easily accessible. That's not the case in all countries. And so the doors are open for that collaboration. Can we collaborate faster and efficiently? Yes, but I think that shouldn't be understated, that everyone here is pro innovation and pro moving forward. I think is a positive thing.
Excellent, I agree. So on that, there's one question here that's really interesting to me. It says, should innovators not wait for regulation and simply get it done and then let regulation catch up? Uber? See, I love innovation. I love people just getting shit done. But there's a huge issue when it comes to lawyer fees and compliance at like the start of things and taxation. There's so many issues. And I believe sometimes if you just go balls to the wall, it could get messy later on.
You can do both, right? I've got a
Oh,
startup.
of course you would say that.
I've got 7 law firms that work for my little startup. At one point I had more law firms than staff. But you need to self-regulate when you're innovating. When you're pioneering, the regulation, the standards are just not there, right? So you need to take the high ground on this stuff, and you need to self-insure and self-protect, because it can be a business failure if you don't.
Yeah. And
the standards will catch up and the policy will catch up, but innovation has, it's like water in a river. It will find a way. Yeah. And New Zealanders, we're inventors, we're innovators, we're exporters. It's just part of our DNA. Yeah. You can't stop that.
I agree.
Yeah, I would agree with what Jerome said there. I think a lot of bright minds in this room and in New Zealand, and yeah, regulation by design comes after innovation. You can't regulate something that's not there. And in principle, we can see what good looks like versus not so good. And there's legal and accounting professions and all sorts of professional bodies that can guide us on that in the absence of a strict framework. And we're seeing that with CDR. It's not stopping the innovation from a product perspective from moving quite fast.
And I just want to finish off with one question. Is a bank account a human right?
I think access to financial services for sure. Yeah. Yeah. I mean, how does that manifest? Is it necessarily a bank account? I think that's probably neither here nor there. I mean, we can conceive a world in the future where we've got a bank, or let's call it corporate agnostic wallet, a digital wallet where we can exchange value, whether it's through fiat currency, CBDCs, tokenization of this chair that I'm sitting on, of my house, of my car, of virtual assets to each other. And so, yeah, I mean, I don't know if there's a hard answer to that question, but I think, yeah, access to financial services and fairness and inclusion is certainly in that shade of human rights for sure.
Any last words?
I think, and for businesses as well. I mean, it's far too hard for crypto companies and fintech companies to get bank accounts. It's actually ridiculous.
It is ridiculous. Yeah. Anyways, thank you so much. Time's up for us. So thank you so much, Sorel, Jerome. Round of applause.
Kia ora, kia ora, kia ora. Thank you, Alison, Sorel, and Jerome. Kia ora. That was fantastic. Up here making friends. Awesome. Love it. Kia ora, Jerome. I'm a Trudy facilitator, mate, so I know all about making friends and conversations. We do have another panel discussion. One thing I will say, though, is actually one of the catchphrases I was listening to in that conversation was about, those moments where we feel like we want to get on and do, like we want to move, and the frustration that you can feel in that space. We often coin that the all hooey, no doey phase, which can be frustrating. I get it. And again, I think we want to make sure all the voices are represented at the table. So we want to move with pace, but we want to move with everybody in the waka, right? So